Hello, everyone, and welcome to the 6th episode of my podcast series, Invested, where I sit down with creators, founders, and business leaders making an impact on this world. Today's guest is someone who I was fortunate to meet a few months ago at a creator economy meetup here in New York City. I was familiar with him and his work beforehand, but I was amazed by his knowledge and energy around the financial media space. Brian Hanley is the founder and CEO of Bullish Studios, a financial media company and advertising agency that partners with leading fintech brands, asset managers, and investment funds to reach and engage investors. Their portfolio of creators includes some of the biggest names in the financial media space, like Litquudity's Exec newsletter, Wall Street Confessions, Dr. Parik Patel, VC Brags, and so much more. If you are a current or aspiring finance professional, then chances are you have seen one of the memes or tweets posted by these accounts. In addition to Bullish, Brian also serves as president of Equity Animal, an investor relations firm focused on helping public companies build a long-term, diversified retail and institutional shareholder base. He has teamed up with fellow Finmeme icon and past HBO reality TV star Mark Moran to democratize access to management teams and Wall Street's most interesting and innovative companies. Prior to Bullish and Equity Animal, Brian was Senior Director of Client Partnerships at Vice Media, where he was a top international revenue contributor and forged unique culture-defining partnerships with global brands like Airbnb, Google, and more. There's a revolution happening right now in investing, but traditional financial media is still stuck in its old ways. This next generation is taking control of their money. But who's telling that story? That's where Brian comes in. Enjoy. Brian, thank you so much for joining us here today. I am looking forward to diving into a lot of topics with you. But before that, would love to give you the opportunity to just introduce yourself, your background, and what you're building at Bullish.
Yeah, for sure. And thanks for having me. It's a pleasure to be on the show. One of the first few guests, so it's a
Yeah.
pleasure. Yeah, so I'm Brian Hanley. I live in New York, and I run a company called Bullish Studio, and also have various other business interests. But yeah, essentially Bullish Studio, at its core as a company is kind of a mix between a media company and an advertising agency. So we really focus on helping, brands and content creators both reach their goals through advertising and growth and things like that we can get into. But yeah, so Bullish Studio is about just over 4.5 years old. I started it right before the pandemic hit, actually. It was in like January or February of 2020. And yeah, so previously I was over at Vice for 5 years, which I can get more into. But yeah, so that's just a little bit about me and a little touch on the company.
Yeah. Yeah. Well, it's interesting. 4.5 years. At this stage, that's quite a while, actually. In terms of a lot of people that I speak to who are founders and all of that, 4.5 years, you've had quite a bit under your belt. And also, I think you could probably say starting a media agency like this, especially around finance, going into COVID and the pandemic was definitely, a bit of being in the right place at the right time.
100%. Yeah, it was definitely like when COVID kind of hit and all of the craziness around the stock market really started to pick up. That was like the Super Bowl moment. I think there were a lot of kind of reasons for why I was, already kind of in the midst of starting Bullish when that happened. And I think, there's some more macro trends that are
Sure.
happening and continue to happen. There's the wealth transfer from, boomers and, our parents' generation down to ours, which is a $30 trillion kind of handover of wealth, which is a really interesting area we can get into. And, when you look at equity and stock ownership in the US and people's understanding of their investments, I just generally saw that there was an opportunity, while I was at Vice to kind of explore this area more. I think, we're still looking at the business models and exactly what works, what doesn't. But yeah, I'm generally very passionate about markets and investments and helping people make the right decisions, but also allow people to take risks and know how to define their own risks. So anyway, yeah, very passionate about markets, money and how it moves, why it moves.
Yeah.
And
Well, speaking of that passion, I was doing some research on some prior podcasts you were on, and you mentioned kind of the mission statement of Bullish Studios was to decrease the wealth gap and increase financial literacy here in the US. What kind of resulted in you wanting to focus on that? Because that's probably a different mission statement than a lot of kind of traditional media agencies and things like that. So would love to learn a little bit more about that.
Yeah, for sure. And yeah, you did your research, and I think the mission statement still holds true. And I think what gets interesting, and we'll kind of get into it, is that we really needed a north star of like what we're doing every day and why we're doing it every day. And I think we kind of picked a few different areas. I think the main thing is like, yeah, we want to help people just become better with money. And there's this real big macro chart showing like financial literacy in the United States over the last 5, 10, 20 years, and it really hasn't made a meaningful kind of increase up since,
Right.
especially coming out of '08. So like that's a really big opportunity and challenge that I think, if we just kind of point our resources and our, our moral values that like how do we help, make that better in everything that
Yeah.
we're doing, that's always something that we're focused on. And then yeah, just, helping, so that's like a big editorial like vision, but then on the other side of it, it's helping people find value where where there is value to be had. And I think
Right.
we met at one of the creator economy events, and I think one of the ways that we really kicked off our business was partnering with creators who
Yeah.
have big audiences that are sitting on potentially a gold mine, and helping them understand the value that's there and unlocking that for them. And then that very action is helping somebody that might have a full-time salary job become a small business owner. And when you see
Right.
more small businesses start, that then helps people diversify their income, and that
Right.
really helps. That is one tactical way of helping improve this wider mission. So
Yeah.
the mission statement is broad, and the way that we're executing on it every day is very different and comes to life differently. But yeah, that's what
Yeah.
we're about.
I mean, it's certainly something that needs to be addressed. I mean, I graduated from college in 22, graduated high school in 2018, and I know it's kind of a common conversation about the lack of financial education in school. You'll take your economics class, but it doesn't talk about building a credit score or applying for college, getting loans,
Mm.
things like that, which the argument could be made is much more valuable than a lot of things that we learned. So I think this is definitely a step in the right direction. I think COVID gave people a lot of the opportunity to kind of reflect on what their finances looked like, and maybe for some people had a little bit more cash to spend and could really dictate if they wanted to invest it in Robinhood and invest in GameStop and all of that, or maybe into some Bitcoin or Dogecoin and all of
Mhm.
that. So I think that was just a really interesting time where people finally had the opportunity to really think more about how to invest.
Right. And it worked. I mean, the GameStop and COVID helped introduce a lot of net new investors into the
Yeah.
stock market. And if you look at a lot of the research, they were single stock buyers. They were buying AMC and GameStop or
Right.
Dogecoin or whatever. They
Yeah.
come in, they might get burned, they might make some money, but now, years later, they're now like, oh, now it's time to do dollar cost averaging into index
Yeah.
funds. So it's like now, but and Robinhood as a business still has that account, and it's just now watching them launch their credit card and all these other kind of
Yeah.
areas. They're now expanding their business. So anyway, it's
Yeah.
interesting to see the cycle of people, because look, at the end of the day, we're all getting older, whether
Yeah.
and I think as we get older, income increases and things change and money moves and it keeps coming in. So it's no matter what the market's doing, there's still people are still working and investing money every day. So there's a conversation to be had about making their
Certainly.
decisions more,
Yeah.
being more confident with their decisions.
Yeah. I mean, Robinhood is in a great spot now. I mean, you mentioned the credit card they just came out with a few days ago competes with a lot of the big names in credit cards in terms of 3% cash back on everything. And the consumer market, especially with the younger demographic, is something that a lot of financial institutions have tried, and failed at. Honestly, Goldman Sachs with Marcus, they shut that down, and that was all about kind of trying to tap into that. So I think that really is the sweet spot of what you're doing, is kind of tapping that younger, more maybe affluent demographic, which, I know you guys specialize in high earning audiences. So was curious kind of how you were able to carve that niche out. Was it more so just that's already the consumer of financial media, or what kind of led to that being your specific niche at Bullish?
Yeah, for sure. So, going back to the mission statement around really helping increase, financial literacy, when we really kind of look at the area that we're excited about and feel like there's the biggest opportunity, it's the 150 million or so brokerage accounts that exist in the United States. Those are retirement accounts, self-directed, Robinhood accounts, you name it, 150 to 180 million or so that exist. just over half of America owns stock in some form in their 401ks or some shape or form. So there's a,
Yeah.
that is our target audience when we think about it. Now, when you open that up further, and a chart that I always love looking at, and it's very interesting to see how this ebbs and flows, is looking at the number of billionaires, 100 millionaires, ultra, and
Yeah.
by actual population number when you go down in the U.S., what zip codes they're in, and really understanding how wealth moves around and where the decisions are happening, and kind of at what scale are they being made at from the institutional level. So part of our as we've grown into this industry a bit, and as we've learned more about it, you have everything from registered investment advisors that are working with high net worth individuals that are moving hundreds of millions of dollars around. They're trying to sell technology to each other, sell
Right.
opportunity. Like, there's a whole world there. But on the complete other side of the coin, you have this retail movement where Robinhood is looking to gain new customers. Then you've got the ETFs and opportunities all in the middle. So,
Yeah.
it is a very wide, and large category. When we think about like the true like market opportunity that we're going after, if you look at the kind of top ad spend categories by category in the US, you've got insurance. Financial services is one of the largest ad spending categories,
Yeah.
which means Fidelities and E-Trades and all the big banks are spending a lot of money. But
Right.
then when you look at another stat from Edelman, which is a very large PR firm globally, they do a kind of a trust survey to understand where consumers and how much they trust given companies and categories. Financial services is one of the least trusted categories compared to all of the other categories, like
Wow.
everything else from
Yeah.
auto to whatever. And you kind of punch in on like, why is that happening? And the reality is that a lot of the marketing teams, I mean, look, it's compliance, it's the
Yeah.
red tape that exists. And I think the opportunity that we've seen is being able to educate our clients around the opportunities that exist to remain compliant, and really helping a lot more underdogs. I mean, we do have some institutional clients, but
Sure.
there's a lot of underdogs that are gaining a lot of users quickly, but are kind of a little bit more bad boyish for right now. But
Sure.
until they
Yeah.
get users, then Robinhood buys them. And you're seeing that obviously with Marcus, and there's other larger acquisitions like that. Mint just shut down. Now that's a
Yeah.
huge opportunity for a lot of startups. So, we really love operating at this area of where money's moving around from the retail all the way up to institutional level, and how can we play a role in helping optimize, grow, help our clients out, but also do the right thing. So we're very picky with who we're working with, and
Right.
you know why we're doing what we're doing. We survived the crypto crash, and now we're into another one. So we've been around for a long time and have seen some cycles. So we generally can kind of be a real like now consultant to our clients of like, we've
Right.
seen this happen. We know your numbers. We know the industry numbers. This is going to work or it's not, or this is the gamble. So
Right.
yeah.
No, that's what you said about the cycles is interesting because in my day job, I advise board of directors, and one of the things that they're always looking for is someone who's been through different cycles. And in the grand scheme of the financial world, it's okay, someone who was an executive during 2008. And so obviously, executives now, not all of them were high level at that stage. But it's funny, just kind of the shortening of the timeline for crypto. It's like, oh, I remember back when in the bull run of 22 or whatever it was, but it is true. There probably weren't that many that were established media firms at that time, especially that were as niche. And so I'm sure that's extremely valuable to clients that, you saw the good, you saw the bad, and you're able to come out on the other side. So it's
Oh,
interesting
yeah.
kind of connecting those dots where things happen a little bit faster these days than maybe in the past.
Oh yeah. I mean, look, Sam Bankman, 25 years. I mean, look at where he was a year ago, a year and a half ago,
Yeah.
and just now 25. It's just like that. And
Yeah.
that he owes 11 billion in restitution. That's a very short period of time to rack up that big of a bill. Like, what?
Yeah,
So
no,
yeah,
that's impressive. Well,
yeah,
speaking more kind of about Bullish, I mean, let's dive into the actual creators in your portfolio. It's super impressive. I'm sure a lot of people who will be listening have come across either a meme or a tweet that you have some sort of affiliation with, but aren't familiar that's actually kind of you and Bullish behind it. Was curious kind of how you've cultivated such a really a very curated but great portfolio of clients and creators that you work with.
yeah, for sure. Good question. So from the very start of Bullish and coming out of Vice, one thing that I had the benefit of at Vice versus what I did not have at Bullish is having an audience. And I was a one person operation, right in the early days, and it was just like trying to figure out how to like find something that is undervalued that could have more value to folks. So, it started off with a lot of DMs to a lot of creators that I liked. I mean, you have your Ramp Capitals and your Liquidities of the world on
Yeah.
Twitter. I was following them as a, as a fan, and then, just built a relationship with them and was like, hey, look, like I know what I'm good at. I know how to, sell ads and sell partnerships and you're sitting on these really valuable financial audiences, whether they work in the industry or there's somebody that looks at you as, somebody that's influential. We
Yeah.
could go and get you some additional money. And I think Ramp Capital, one of the, OG Twitter accounts in the financial Twitter world,
Yeah.
was one of the first folks that, I partnered up with. And then, from there, it was helping him just, we were helping him make more money. So then at the end of the day, it was like, it was beneficial for everybody. He was, they were able to, see some additional income and
Yeah.
in addition to having other, full-time commitments, while, we were also able to help build relationships with these clients that are in the inbox of these creators, but they just don't have the time and energy
Right.
to unlock that value. So that's
Yeah.
really where this started. Then it kind of spread to where now we were, looking to, the campaigns got bigger, more creators were involved. And I think we kind of pivoted our model slightly from traditionally being more of like a talent manager, talent agent type
Sure.
of relationship with creators to being more of kind of just a general partner and more on the kind of agency side, where
Yeah.
as opportunities arise, we kind of work collaboratively with creators, or we go really deep with a creator and we do a joint venture or, some type of deeper relationship there. So, what we're really doing is, if we see opportunities where there's creators online that are kind of in our niche and in our world that we can really add value to,
Yeah.
we help, develop ideas, technology, strategies to help them unlock that revenue. And on
Yeah.
the flip side, it comes down to having the brands want to get involved. So
Right.
we understand the language of the audience, of the creators, and of the brands, and that's really where the magic happens, bringing those together. And that's why when you look at the folks that we've worked with, we helped promote the Sony's Dumb Money, the movie about GameStop. They kind of
Yeah.
came to us and said, hey, look, we're trying to promote this film to the financial Twitter community, help us make memes, get the word out about this. And we, helped, basically help them partner with about 10 different accounts, made a lot of buzz and ultimately helped them drive a lot of awareness. So
Yeah.
those are kind of some of the opportunities that we work with brands and then ultimately the creators on.
Yeah, no, it's fascinating. I actually I only got the chance to watch Dumb Money the other week when I was flying. It's a great movie. So I think the studio definitely kind of understood the demographic of who they wanted to go after, and I
Totally.
think they were pretty in line with the culture and all of that. So
Yeah.
you
And
don't
something
you don't
just a little
always see
funny
that.
note about that, we actually licensed them some footage that was
Really?
used in that film from a creator that was then ultimately paid for that footage to be used in the film. So like that's another example of like you would never think that a TikToker could make a couple bucks off of just answering an email from what seems to be some
Right.
weird agency that
Yeah.
does this, but we know who they are and they might look like a scam, but it's like, oh, they're actually a top provider. And
Yeah.
then all the money flows when it's sitting there. So that's the value creation that we bring to the table
Yeah.
for creators.
Yeah, no, that's that's awesome. And
Yeah.
I mean, yeah, especially during that stage. I mean, of course, Wall Street Bets was large and all of that, but the actual media side of things, the accounts on Twitter that were talking about it is a smaller world, compared to general news and things that may be going on in sports. Like it's a smaller community where realistically people know each other, they follow each other. So it's yeah, kudos to you guys for connecting the dots there and helping get someone paid. Kind of a similar question there. I mean, you touched on helping the creators monetize, their platform a little bit more. What were some common things that you were seeing that were just maybe low hanging fruit, or for a lot of these people, they have a full time job, and this is kind of just a thing that you do on the side. Where for people who may be watching this, like, what is, if you have an audience like that, what is something easy for you to do to kind of jumpstart a little bit more of that earning potential?
Yeah, for sure. I mean, look, it all depends on kind of what stage you're at, but I think really it comes down to like, as a creator that's passionate about trying to monetize their audience, it's, answering their emails, being curious and, allocating a percentage of their time to really focusing on, exploring the opportunities that exist to make money. I think, and this is something that when we talk to a lot of creator partners or other, other partners that we have, it's like, what business are you in? And where do you need help and where do you want to do it yourself? And
Right.
we see a lot of people that are going from single person part-time operations, maybe they're full-time on their own, to then are they going to make the jump and hire 2 or 3 people or build a team underneath them of contract workers or whatever it is to really build them into a true business? So
Right.
that's really where kind of we're at. A lot of the folks that we're working with now already have kind of found unique ways to generate revenue, but they might be, in a unique position where they're tapped out. One, for example, there's a lot of creators that are making money on X right now, which is
Yeah.
great to get those ad checks, but there are a lot of other ways that you could be monetizing your Twitter account beyond just getting those checks from Twitter. Obviously, there's the whole newsletter world to be able to
Right.
launch that, but then there's products, there's other ways to monetize, and it's being willing to try new things and, willing to, just constantly, answer your DMs and,
Yeah.
know what your rates are, have the materials that are commonly asked for. So
Yeah.
whether you're a do-it-yourself creator or you're working with another, partners to help monetize, it's really just putting yourself out there, knowing what you want from folks and going out and getting it.
Yeah. No, great advice. And yeah, so much. I'm amazed at just how people find my email. Of course, it's like in my YouTube, and it's not that hard to find. But I really do enjoy checking my email, and I think there's a lot of importance that I'm sure you would value of just being timely, getting back to people really quickly, because they might be interested right now, but if you reply back in a week or two, things may have changed. So that's something I've always
Totally.
tried to
Look, and it's
implement.
funny. I said we've been around for 4.5 years. We get emails back from threads that we were on 2.5 years ago from somebody that's like, "Hey, you guys still around? Is this still good?" And it's like, "Yup, nothing's really changed too much," And it's like, it's it's the products that we're offering are pretty, sponsored content on the internet is not going away anytime soon.
Sure.
If you look at the charts of where creators actually make their real money, it's all sponsored content. Yes, there's
Right.
platform revenue. Yes, there's affiliate. Yes, there's subscription. Alexis Ohanian, the co-founder of Reddit, posted a chart showing this breakdown, and I jumped in and I'm like, this chart has been the same for years since the creator economy became a word. It's always been direct deals with brands are the most lucrative. So,
Right.
if you're somebody who is a creator that just relies on Twitter, X or, X ad revenue, you can now go and double your earnings by just,
Oh yeah.
exploring something else. So I love helping unlock those ideas for, creators, independent media companies,
Yeah.
larger, fintech companies, things like that.
Yeah, I mean, well, it's one of those things where it again kind of aligns with that mission statement and just the democratization of things. And one of the things again you mentioned in a different podcast was just that creators now are the small businesses of years in the past. And of course, there's still the mom and pop bakeries and all of those things, but really creators, these are so many different small businesses. So kind of just curious, kind of how you feel about that statement. First of all, what maybe has changed since you first said that, but then
Yeah.
also, I guess we probably don't need to go too far into the potential TikTok ban, but that could be a big thing. How often, like how much of a deal is that for maybe your clients, and how are you navigating that? I mean, I understand most of them are probably Twitter based, but is that a big concern? Just kind of how that could
Yeah.
wipe out a lot of small businesses. And it seems like at times the government just only sees people as creators and not the fact that
Right.
they're small businesses just like anybody else.
Yeah, for sure. So to address your first question about, the opportunity that exists with creators becoming small businesses and mid-sized businesses, we're seeing like, a lot of that, right? We're hopefully going to see the first maybe billionaire YouTuber,
Yeah.
and this is happening, this is going to continue to happen, right? There's been some interesting kind of chatter around the fact that when you open up like a small business as a creator, there's no like field for like
Right.
internet creator and it's like a
Yeah.
media company or something else. And I think like, we need to be able to categorize it better. But, I think we're already seeing the kind of, the excitement and the energy and the ad spend and everything kind of come in and continue to come into the community year after year. It goes up and down, but there's net new money coming into the creator economy and influencer marketing every year, and it has been.
Yeah.
So there's always opportunities, no matter what niche you're in. There's always something there. If you see it and it's there and they keep doing it, it's probably happening because it's working or there's a reason for it. So that's it's been exciting to see, and it's been fun to grow alongside a lot of the creators that we first started partnering with, and
Right.
the companies that we partner with. We've had multiple clients that have gone on to get acquired, have very good earnouts, and sometimes they'll accept some of our payment in options or stock, and it's like
Yeah.
always nice to see that. But then also just content creators that somebody gets a TV deal or somebody gets a big show, so it's always fun to see that emerge, and we're just going to continue to see that. That's what gets me excited to keep doing what we're doing, is watching folks online succeed.
Yeah.
And then I think to your points about the TikTok stuff, I mean, look, I know there's a lot of chatter around this. I think, like, look, at the end of the day, I don't think TikTok is going to, like, quote, go away and get removed from our phones at any point in the future. I think it's going to continue to be here and exist and provide opportunities to a lot of people. I just don't see it getting that far. And if they have to divest, they'll figure out a buyer and it'll
Yeah.
get transferred over. But then I think there was an interesting kind of article. I forget where it was published, but it was talking about what happened in India when they had their flat out TikTok ban. And it ultimately caused a massive surge of people going to YouTube and other video
Right.
platforms. But ultimately, and this article interviewed a few, like, local Indians and Gen Zers over there, and they were just like, it's just not the same. It just, the algo is just not the same.
Right.
And I think we'll see. Look, if TikTok goes away for whatever reason, it's going to be a big push towards X now getting more into video.
Yeah.
Video as an entire kind of media type, and is something that is very exciting and has always been very exciting to me in my entire career. I mean, that's why I started Advice. I love their documentaries,
Yeah.
but being able to generate audience, generate revenue, make the content, make it good, build an audience, that's a tough doing that for video is very challenging. And that's where TikTok was able to figure it out, and they grew very quickly. But there's a lot of opportunities with just video. You're probably a lot closer to the email newsletter world, and obviously you're getting into YouTube as a YouTuber, but YouTube is hard. You're spending a lot
Yeah.
of time, takes a long time to get monetized. So, but when you crack it, it's lucrative and it can
Right.
be big. TV opens up, you're on camera, you're trustworthy. Advertising on YouTube, it works so much better than any
Right.
other kind of platform, because when you're getting a live read video demo of what that product is, you're full screen in it versus on your phone half asleep watching
Right.
another TikTok,
Yeah, kind of
watching
a
a second of
question
it.
that just came to mind from that. I mean, obviously, with a lot of these accountants that you work with, the person behind it is anonymous. So
Some are, some aren't.
some, yeah. So there, at times, you can only feel so much of a level of trust. How do you feel like that might impact the advertisements, or maybe the actual amount of sales that are generated through that? Is that an issue, or because it's kind of they've just been around for so long, the audience has that relationship with them?
No,
Because I mean, that's totally a thing. Someone feels much more connected to someone when they've seen their face, heard their voice, things like that. But was
yeah,
curious just because a lot of the people you don't really get that personal connection with on
for sure.
Twitter.
Yeah, look, the only thing that a follower has with their audience is not followers or anything else, it's trust. And the second that you cross the trust line with your audience, it's really tough to win it back. And I think, not like anonymous accounts, or, people who don't make their kind of name or face visible online always face more of an uphill battle, with everything from conversions to, engagement. The engagement rates when you have a real human on screen talking to you, and the view through rates, everything is much higher. So
Right.
you're always at an advantage having your face on screen. You're a trustworthy person. You build that trust. But now you also have people that are not trustworthy. They put their face on camera and they don't
Yeah.
do that. But ultimately, look, we saw a lot of crazy stuff during the crypto kind of boom during COVID, and we watched a lot of creators that we were started to maybe work with, or were exploring working with them. And then we looked at their accounts, we looked at some of the stuff that they're promoting, and you're just like, dude, you're scamming your audience. And if
Yeah.
we run an ad with you next week, it's not going to perform as well, because you already are pushing your audience to go and buy this crappy thing or that
Right.
bad product that is borderline a scam, and you're just in it for the quick cash, and that burns out. There's a stat that the average creator only lasts about 25 months before they burn out, and or just they kind of just stop appearing on the internet,
Right.
so you might see this a lot, but it's you only have the trust with your audience, and that will always go a far way. And
Right.
look, not everybody is perfect, right? Like there was a ton of people, and ourselves included, that were the recipients of FTX sponsored content back in the day. I could not sit here and tell you I could have done better due diligence on them or
Right.
anything else. It's like, you come back out to your audience and you apologize and you're like, look, we did as much as we could. We took this decision. We're an ad supported business. Like, not every single ad that I'm going to live read here is something that I'm going to like open up their QuickBooks and see if they're a
Right.
solvent company. Like, come on.
Yeah.
So, it is what it is. Like, if part of your business is an advertising based business, there are decisions that you have to make, and a point of view that you have to put out on what you want to take, what you don't. But yeah, it's something you really gotta, you
Yeah.
cannot fracture the trust with your audience.
Certainly. And I mean, even when you were just talking about that, I was thinking of Litqudity. I know Hank recently kind of came out, which is
Hmm.
weird to say, but for the longest time he was anonymous and obviously was able to build a lot of trust. So I think that's a really great kind of case study, and that it can be
Totally.
done to a massive scale. Um,
Totally. But
yeah,
the key thing with Liquidity though is that he worked in the industry that
right,
his audience, that the audience that he built is in. And that's, I think, that what enabled him to build that trust. If he was
right,
not in the industry, he would not be able to have that level of engagement and trust that
certainly.
he's been able to build to this point.
Yeah, no, totally agree. Speaking of that, I mean, you've done a lot of things at Bullish so far. If you look through the YouTube channel, there's This Week in Money, which is super entertaining, but then there's also kind of some carved out series with dedicated creators. Kind of in terms of that, I mean, how do you kind of determine success? What do you look at when you're kind of dictating where you want to spend your time, where you want to spend your dollars? When is it time to call it quits on things or double down on others? How do you navigate that as a business owner?
Great question. It's something that I battle with every day and have been since the day, even before starting Bullish. I have made this decision, and I continue to always question it or whatever. But we're a bootstrapped company. I started the company by selling ad deals to fintech companies and using that money to pay myself and ultimately just build the business. And now we have about 6 people full time on the
Yeah,
team. And it's actually down from about a year and a half ago. Like, we had to make changes based on the market conditions and stuff, and I've learned the type of business that I want to build. But I think what you're seeing ultimately in a lot of the content that we've created, to the point about the YouTube channels, are that we try a lot of things. Media companies are inherently experiment machines that are trying to see what content can work. Is there an audience for this? There's no clear cut way to create a media company and create a show that is a hit show. Now
yeah,
there's best practices and formulas and all of that, but it's hard. And I saw that advice. It's like some of the dumbest stuff that we were like, oh, this is the cheapest, dumbest thing that some like production assistant made, but then that's like the top thing
yeah.
versus something
Of
that
course.
costs $500,000, and it's like, what? So, what we have always done for our business is, to keep ourselves solvent and, be able to have fun and continue to keep the lights on, is that we try a lot of things. So the YouTube channel is a really good kind of timeline and journey of, our entire
Yeah,
experience as a company. We, started off doing, an episodic video series called Trendline, where they were 15-minute episodes where we followed the history of a stock price over a 30, 40-year period. Ulta Beauty did some Chipotle, and just like what happened during the E. coli crisis, how did they
yeah,
recover their top stock? Like, so more documentary stuff. We've done some talk shows, daily, weekly shows. So, if it works, and we see success on it, and, there's a variety of different metrics that we look at to determine success. You're looking, and I think one area that we have an audience on is YouTube. We also have an audience on Bullish Rippers, which is a weekly email newsletter that just basically summarizes the market in a really simple newsletter every Saturday, which goes out tomorrow. And that's written by, a creator, Evan, who is behind the Stock Market News account on Twitter. I think
right.
300,000 or 400,000 followers. So, there's a variety of different ways that we speak to audiences. And the
Yeah,
way that we really look at these different, opportunities that we explore on our own, because sometimes we partner with creators, sometimes we do it on our own, is what's the business model? How do we know when this thing is going to be profitable? How much of our resources from a staff time and a budget do we want to put behind something? So,
yeah,
at the end of the day, we keep ourselves very grounded. And that's where, when I look at, companies that took on a lot of VC money, especially media companies, you
Yeah.
are more aggressive with these big bets. And then, you look at like the 10K for somebody like a Rumble. They're spending over $100 million a year on creator guarantees. Substack too is doing it for a long time. And you read it in their earnings, it's not sustainable.
Right.
And at the end of the day, somebody's going to pay that bill, whether you're an investor, which is why the companies are likely a little overvalued, or you're just a creator that all of a sudden your earnings just go away from a platform one day. So
Right.
we move around platforms quite a bit. We have a host of, Snapchat shows. We've got Twitter accounts. We have accounts that we own and operate. We have accounts that we partner with. And, so there's a lot of areas that we publish in, but
Yeah.
ultimately, is it working? Are we having fun? Is it profitable? And we're keeping the team lean and mean. So we want to
Yeah.
work on things that we enjoy and keep ourselves free to explore other ideas as they come across our desk. So yeah,
Yeah, I think it's super important to be agile, to be nimble. I mean, so much that's happened in the financial space. I mean, we obviously crypto was a longer time ago when it really came onto the scene, but then even Web3, NFTs, SPACs, like all of that really is a good example of being able to adapt quickly and take advantage of that. You mentioned there a lot of kind of what you learned during your time at Vice, and maybe some ways that Bullish is similar and ways that it's different. I'm curious, what led you to take that jump into doing your own thing after a pretty successful tenure at Vice?
Yeah, for sure. So I was at Vice for about 5 years, mainly on the sales team. So I was really working on working with large advertisers and small ones to build partnerships across the entire Vice portfolio, whether it was the websites, the YouTube channels, the TV channel that eventually came, the social accounts, and had a ton of fun there. Look, it was a wild ride. They were raising money. It was the heyday of that phase of digital
Yeah.
media with BuzzFeed and Vox and The Verge, all these companies coming up. So it was a ton of fun. While I was there, we were kind of going through this kind of strategy where we were identifying different areas of the Vice audience that they had, passion, like a lot of passion for. So there was Noisy for music and Munchies for food that were kind of these sub brands.
Yeah.
And one area that I grew passionate about that we kind of soft launched and got it out was this idea of Vice money, right? What would Vice's kind of journalism look like if they brought it to markets, right?
Right.
And ultimately kind of tried some things and worked with, when I went out to the brands, it was shocking how much money, and that was my first experience, like, wow, financial services companies have very large marketing budgets and there's a lot
Yeah.
of money here and they're having a lot of trouble deploying it, especially on younger focused targeting. So Vice was kind of an ideal fit
Yeah.
for that. So really saw the advertiser opportunity and the ad opportunity together with the audience opportunity, because
Right.
millennials are getting older. They're $30 trillion wealth transfer, they're making money, getting promoted. So there's this opportunity. My time at Vice was up. They were making a lot of changes and they essentially decided to go more of like a master Vice approach. And
Sure.
I always had an entrepreneurial kind of knack. So I think it was just the right time for me to go and jump and do my own thing. I was always like helping advise friends that were creators and influencers, and always kept doing deals where I could help connect people
Right.
together. So yeah, I took the jump after 5 years, and yeah, it took me a little while. I did some consulting, but then eventually landed on Bullish, and it's gone through a lot of different kind of iterations, and today is different than where we'll be in 6 months and where we were 6 months in the past. But
Yeah.
we're staying lean, efficient, and bootstrapped for now. If there's opportunities that exist, we'll explore them. But we're in charge of our own destiny. I don't have a board of
Certainly.
directors to go answer to for board meetings and
Yeah. No,
things
that's
like that.
that's important. You mentioned there, and you've alluded to it throughout the podcast, the wealth transfer and some of these other pretty major demographic shifts that are coming. I'm curious if through the brands you work with, just through your own data that you see, what are some big trends or shifts that you're seeing with respect to consumer finance preferences within the Gen Z millennial demographic? I would assume it's pretty different than it was for prior generations. So just curious, what's kind of the next big thing there?
I mean, look, there's a lot of different interesting things happening when you really kind of hone in on all the different areas of the wealth gap kind of coming to fruition in like real examples. And I think like some of them are really wacky and complicated. Others are like, well, that's crazy. And I think like we're looking at data that are individual data points and also reading a lot about where the macro is. But the sheer amount of money that is being exchanged and being willing to be exchanged on the internet continues to baffle my mind, whether it's people that are willing to go and authenticate their brokerage account and, deposit $50,000 in an app that they just saw an ad for. Like there's a lot, like that's where it's just like, wait, what's happening here, right?
Yeah.
Then you have instances where, there's you hear, employees at, big tech companies, especially Nvidia and others, where, their stock options are now worth 10 times what they were when they started at the company as middle management or as an analyst. And now they got 5 to 10 million liquid of Nvidia stock that came out of nowhere. And it's like, what do you do with that? Who do you call? And that's where the opportunities start to exist of like, okay, do you call an RAA? Okay, who is good? What do you have to look out for? There's a media opportunity and educational opportunity there. And then it's like, finding the right, connection. And then you go on that whole path, which is exciting and to see. And, people, whether it's also, trusts that are coming down or a parent passes or they have to liquidate a huge trust with tons of real estate and companies inside of it. You're probably seeing a trend of these like online businesses that are trying to get bought and sold. And, the amount of, I read a lot about the amount of, and I'm in an executive coaching group where, a lot of the folks there are, looking to kind of exit their business in the next 5 years because they want to retire and kind of spend more time with their family. And, the amount of opportunity that exists of that value that exists in these small businesses that might just get wound down, or they could get bought and somebody else could come in, whether it's a relative or they sell it. That's kind of where you start to see the money transferring from generations and the complications that start to emerge there of what, you get a call one day and it's like, hey, we've got, 3 buildings and a small, dry cleaner and a trust that's in your name. What do you want to do with it? And it's like, oh, I got to unpack this. Who do I call? I got, so you start, there's a ton of really wild stuff happening. And sometimes you just have to open your eyes up to like, whoa, okay. You're seeing a big rise of the OnlyFans subscribers. I mean, just seeing the numbers around how much money is getting paid out and how that then affects people buying more Lambos. I mean,
trickle down
and more. I mean, we did an interview. We did an interview with one of my partners on Equity Animal, which is an investor relations business that we run, Mark Moran. And we went to 47th Street to the Diamond and Watch Jewelry District in New York and did an interview with a watch dealer there. And we were, learning a little bit about how crypto prices with certain brands of watches are so kind of tied together, and how like Miami is blowing up as a hub for watches. And it's like funny to see how these different asset classes tied purchases, whether it's on the luxury side, LVMH and others are at all-time highs. Like you start to see where it moves around, and it's interesting.
Certainly. On the last episode of the podcast, I had on Jack Boudreau, who used to work at JPM, then was at Techstars, and now is building out his own startup that's supposed to help kind of play matchmaker for individuals, the millennial Gen Z demographic who are looking for, financial advisors and kind of take that first step. And I think our generation, Gen Z, millennials, we grew up in the age of the internet. So I think we definitely always think, oh, we can do it ourselves. There's a YouTube video for everything. But for a lot of these things, when you get into the nitty gritty of taxes and all that comes along with kind of finances, you kind of need some outside help. And so there, like you said, there's a huge opportunity there. That's something Jack's working on himself, but from obviously a bit of a different angle. So just really interesting to see kind of where that goes. You mentioned Equity Animal there. I definitely want to dive into that. That's a pretty significant jump from kind of the traditional media space, but also still has some adjacencies. I'm curious, what was it about investor relations? What was it that really made you want to take that additional leap into, a relatively more regulated space? It's a little bit more structured. What opportunity did you see there?
Yeah, for sure. And it's actually surprising. It's not as different as it sounds. In our work over the years, we've been working with a lot of people who are broker dealers, the Robinhoods of the world, and also investment funds, ETFs and other alternative investments, your Masterworks and the Start Engines of the world. So we've always worked with, our first client ever was a broker dealer. They're regulated. They've got a lot of rules. So we've always been in this highly regulated industry, and we've known the kind of the rails there. through our work with Litqudity, early days, we met Mark Moran. And, when Mark was, on Twitter one day, he, one of the CEO, or there was one of their largest shareholders of the only publicly traded adult club, the strip club online, it's RCI Hospitality, essentially hit him up and said, hey, look, you should, you're doing a lot of really interesting stuff on Twitter. You're a former banker. You understand markets. You understand the internet culture. You understand banking culture. Maybe you could help this company out. And, we got pulled into the, discussion on that. And, essentially we're like, hey, this is a really interesting company. It hasn't been memed. There's not really a ton of conversation about it. It's the only strip club that's publicly traded. We could probably do some fun stuff for them. And, as we started to learn more about them, they host their earnings calls every quarter, just like everybody else does. And we're like, how many people go to an average earnings call that dial into the 1-800 number, or the WebEx that's old and clunky, and they're like maybe like 50 to 60 people. And it's like, you're talking about like the inner workings of a strip club, like, and the economics of it and the future of it, and people can ask questions. What if we brought that to, Twitter Spaces? So we basically brought the entire call to Twitter Spaces and hosted the first ever earnings call live on Twitter Spaces for a publicly traded company. And on that first earnings call, I think we had north of 5,000 or 10,000 people. And, throughout the work that we've done with them, it's added, it's a lot. It's really helping the management team at RCI understand Twitter, understand that there are investors on Twitter every day that are curious about investment opportunities. Everybody that's in the market, that's a self-directed investor, is looking for ideas and idea generation. I just had some work done in my apartment. The contractor is talking to me about some uranium play. And I'm like, what? I'm like, all right, let's go down this uranium rabbit hole. I know nothing about it. I'm never going to claim to, but should I put, $100 in some uranium play? So, everybody wants ideas. And, so they, we basically, are opening up access to management and creating a direct dialogue between the CEO of a company and their shareholders. And, something that you also see more widely on Twitter is the amount of public company executives for the longest time, they would be quiet. They would have to use their communications team to get their message out, or press releases. And, Elon kind of really, was one of the early movers on this, of just, talking about the stock as like an investment. Obviously, he's gotten himself into a little bit of trouble, but you start to see people like Jim Farley from Ford, and you've got, Toby from Spotify, or Shopify, sorry, Daniel Ek from Spotify on there. They're all talking about it. They're talking about their earnings. And there's this ever increasing look as a company where you have to be speaking to all of your constituents. You have to talk to your customers, your investors, your employees. And for the longest time, the investor world, and it still is very old and clunky and weird. And, we're helping companies essentially get out of their own way, understand the opportunities that exist, and, enable these publicly traded companies to embrace just simple, modern communications. One very simple thing that we say to clients is, if I go to your investor relations website and sign up for your email newsletter, what is my experience going to be like? I'm going to get an all caps email every quarter with whatever you just put on PR Newswire. Let's work on that. I'm somebody that has how much money with you, and that's how you're going to communicate with me. There's got to be a better way. And it's not that hard of work, right? So it's really helping bring a fresh approach to a very staid industry. I mean, the IR industry is a couple $100 million a year industry in fees. So, it's not the biggest, but we can have some fun, and markets are fun. Working with publicly traded companies are fun. Seeing like shareholders come in and come out. It's very exciting to see, sentiment shift and how that all has an impact. So, we launched Equity Animal in partnership with Mark Moran. We work with a handful of publicly traded companies and other kind of market constituents, and, help them better communicate and reach their shareholders, better understand their shareholders. We've been doing some fun programs around shareholder rewards with another partner called Stakeholder Labs. You should have Matt from that company on. They're doing some really exciting stuff where, if you are a Disney shareholder, you could authenticate your brokerage account with Disney to prove that you're a shareholder and receive benefits based on that. The old school stock certificate for a Carnival Cruise Lines discount kind of thing. So there's a lot of exciting kind of technology and ideas that are emerging in that industry. And, we threw our hat into the ring. So that's been another company. It's been bootstrapped and, having a lot of fun. It's lean and mean, and it leverages a lot of the, learnings that Bullish has had over the years. So that's why I kind of serve as president of that company. And, we have a lot of fun.
Yeah, no, it always looks like a lot of fun. And I think again, there's a lot that came out of that. But just for Mark's own situation, the fact that he was posting and then had this amazing opportunity come, that's a whole other conversation, talking about putting yourself
Mhm.
out there online. That's what you alluded to earlier. But, for these clients that you work with, I mean, it really you have to have that buy-in from the top. Is that kind of the same for each of the CEOs that you work with, or like how much of it is like you guys telling them, oh, I think this will be really interesting, and them kind of being like, no, that's pushing it too far. Like, how do you find that balance?
Yeah, for sure. Look, in any kind of like client, vendor relationship, at least in the work that we do on like more on the creative front, rejection is very good. You want to be able to kind of see where clients say no, because if they're not saying no, you're not pushing them enough. We are there to help be an advocate for best practices, of these platforms to our clients. In
Yeah,
some cases, it's on us to deliver on that. In other cases, it's on them. We are, for example, Eric Langan, who's the CEO of RCI, we're helping him with best practices. We're helping generate, Twitter threads about the history of the company, but then he's the one that's tweeting about what club he's going to be at next and doing like a little meetup. So
yeah,
he's embracing it in his own unique way that works for his schedule, his time. And
yeah,
then we kind of are firepower on that. So yeah, look, we get told no every day. If we're not getting told no, where it's like we're not pushing the
sure,
envelope enough. But yeah, it's really on the clients that want to embrace it. And look, a lot of times we really just help CEOs get out of their own way. The number of times, whether you're the head of marketing at kind of a larger financial institution, or you're the CEO of a just getting into product market fit category, so many people, and as a former ad buyer for Samsung, looking after hundreds of millions of dollars in ad spend, there's always a new opportunity that should be tested and be executed on.
yeah,
And founders sometimes are like, Facebook ads don't work for me, Meta doesn't work. It's like, every Fortune 500 company has figured this out in some way, shape, or form. And I respect your desire to grow organically, but if you're not spending, you should be spending. If you're spending, are you diversifying enough? There's a
right.
lot of just getting out of your own way that we help educate founders and marketing leaders on all day.
Right. No, that's super. It makes total sense, and I think as the executive office kind of transitions in future years, just because obviously with the baby boomer demographic and all of that, is younger generations, maybe still not ours yet, becoming the CEOs. There will be more of that just understanding of social media. I mean, you
Mm-hmm.
got to remember, like the CEOs were around, like they were growing up in completely different times, so it can be extremely foreign for them. But I think you guys are doing everything right, tapping into like it really connects everything that we've talked about today in terms of tapping into that younger demographic who's, investing curious or whatever that may be. And if they see a tweet and they think, oh, this looks like a really interesting opportunity for me to invest in, like by all means, that's really cool that you were able to create that, because if it weren't
Mm-hmm.
for that, they probably wouldn't have gone down that path.
Totally. Do your own research. Everything's done above bar,
Of
and we're
course. Yeah.
educating people on the FTC and
Yeah.
ad guidelines all day. And it's just it just got to be done above board, and you can have fun. It doesn't have to be you know teams of people and doing something. You can just have somebody go and put a tweet out, and it'll be just as impactful as a team of people working on something.
If not more impactful, that's for
Yeah,
sure.
exactly.
So I know we're approaching the end here. Want to give you the opportunity to just share advice that, let's say, maybe you wish you knew when you were coming out of college, when you were starting your career. You've done a lot of amazing things. You've met a lot of fantastic people. What's some advice to a 22-year-old just trying to figure it out?
Yeah, for sure. I mean, look, depending on what you want to do and where you see your journey. I mean, look, when I graduated from college, I was fortunate enough to find a job at Samsung's advertising agency, and really was able to open my eyes up to like what it's like to work at a very large company, but also that you could also do some of your own stuff on the side that is not in conflict with what you're doing. And I think I love when folks have like side gigs, even if they don't want them to be the largest, and most, the biggest part of what they do, but
Right.
having a little Etsy shop or making your own meme account on Instagram, like have fun, explore your passions. And, sometimes if you wanted to, passions can turn into businesses. And I respect if you don't want it to be, but just take your shots. You can, it's not hard to just like, start an Instagram account or start a Twitter account and just
Yeah.
have fun when you have time to do it and set it up. But yeah, I would just say, yeah, go and have fun, try things. Don't be shy about popping on a different social media network you haven't been on in a minute. And yeah, see, have fun
Yeah.
along the way.
Well, I think, yeah, I mean, this whole thing is a good example of putting yourself out there and seeing what comes from it. Chances are, if you start posting that content or you go to that event, it opens up that surface area of luck where just it creates a lot more opportunities for good things to happen to you. And I think your entire
100%. We
career
met
so
at an
far,
event.
yeah,
That's it. Yeah.
exactly. So with that said, where can people support you? Where can they follow Bullish? All of that. This is the time to plug everything that we talked about today.
Yeah, for sure. I mean, look, we're at Bullish Studio on X, bullishstudio.com. I'm at Hanleyman, HANLYMAN on X as well. But yeah, we're on the internet and shoot us a follow. If you're interested in any like stock market updates and things like that, check out bullishrippers.com. That's our weekly stock market newsletter I mentioned earlier. We also have another social account to just keep plugging different accounts is Ticker History on X. We've got a pretty large Twitter following there where we talk about historical stock market and investment stories. So we've got some stuff coming out about the guy who sold the Brooklyn Bridge a few different times in the late 1800s, early 1900s, and was trying to sell the bridge to a bunch of immigrants right off of Ellis Island, and it's a hilarious story. But so we publish stuff like that. So shoot them a follow. But thank you very much for having us on. It's been
Of
amazing to
course.
see your journey as a creator and as a YouTuber, and you've jumped into video. I always love to tell people like the biggest opportunity that's like in our world of creators and financial media is being a on-camera person that talks about money and what their experience is, and as coming from a position of you working in the industry is a peek into something that people
Yeah.
can't see otherwise. So you're always going to have opportunities as a real person getting on camera, being consistent, and having fun along the way. So thanks for having me, and congrats on everything you've built.
Yeah, well, I appreciate it. It means a lot coming from you. And yeah, again, thanks for coming on and look forward to continue cheering you on. So thanks, Brian.
Hey man, thanks for having me. Bye bye.